Greetings, Algo artisans. It is May the 6th, 2024, and we're going to take a look at what's going on this week in the markets. We're going to take also a look at Bitcoin, gold, and the SP500. We're going to get into the charts right now. Actually, that's a lie. Before we look at the charts, we're going to take a look at the economic data coming out this week. Monday, not much going on. A lot of this is going to relate to the Forex market. However, USD related news. So like right there, you see that's Australian dollar AUD. The USD related news will have an effect on all markets, okay? Especially if it's like inflation data or FOMC like last week. That had a huge effect. So we are going to see if there are any landmines out there waiting for us. 12:30 a.m. tomorrow. EST, there's some Aussie dollar news. Pretty big Aussie dollar news, so if you're trading Forex markets in the Aussie, be able to watch out for that. Now, this is Tuesday, not much going on. Wednesday, not much going on. Thursday, some British pound news at 7 a.m. EST. That's their version of the FOMC bank rate, so there's going to be some pretty big moves. So if you're trading anything pound related, like the cable or anything else, got to watch out for that. 6:30 a.m., there's unemployment claims, as it is every week. It's a weekly number. It might not have as big of an impact as you might expect. However, if it is way off the estimation mark, then yes, it might have a big impact. So you got to watch out for that. If I were in a trade prior to this, I would make sure that I would protect against a loss. Now, there is the 30-year bond auction, and this is going to happen at 1 p.m., 1:01 p.m. EST, and that might have a bigger effect than they normally would. So the bond market is going through some interesting times. There seems to be less of a demand for the U.S. debt around the world, and China and Japan are known for buying our debt and holding a lot of our debt, and they simply seem very disinterested, and the U.S. is even having some trouble getting third world countries interested in buying it. However, the U.S. does have relationships around the world, and they know this is coming, and they do have the Fed as a buyer of last resort. So this bond auction, unless it's very far off the mark, shouldn't be a big issue, but we do have to be careful of that. If I were in any trades leading up to this at 1:01 p.m. EST, I might have my stops tightened up or take other measures so as to protect any positions, and that includes everything, stocks, anything traded against the dollar. Their GDP for GBP, that's the British pound. British GDP comes out at 2 a.m. EST, which is the London Open. Some more news coming out for Canadian dollar unemployment, employment data coming out at 8:30 a.m. EST, which would affect any kind of Canadian type trades in the Forex market, but overall probably not a whole lot. May affect oil, but probably not. It's more like oil affects the Canadian dollar rather than vice versa in my experience, although the reverse is possible. And then the last bit of data that comes out on Friday is the University of Michigan consumer sentiment, and this is yet another item at 10 a.m. on a Friday that might add some volatility to the market. So I might wait to get into positions if I were not already in positions on Friday until 10 a.m. EST, let that data hit the market. So that's the week. It's actually a relatively uneventful week, which is great in a way as long as the market has some other volatility coming to it. It's just a way to sort of predict when changes might happen, so on and so forth. And this is over at forexfactory.com. I use this as a tool all the time. It's really great. Okay, let's go ahead and move into the charts. We took a look at Bitcoin this morning on our live lab. So if you want to kind of review that, I'm not going to go too into detail on Bitcoin right now because we spent a lot of time on that this morning. Just check out that live video. I can tell you that I do see a head and shoulders type formation. Okay, so this might be the beginning of a move up, or map out what might be a head and shoulders here. And then we'll map out what the targets might be as well. Now, price went down to 56,500-ish. Okay, it made its way down there, and we did have more or less of head and shoulders here. Neckline broken. But over here it actually got broken. However, it seemed to reject it, so there might still be this head and shoulders play yet left. However, the right shoulder may actually end up deeper. Technically, one could say that it already has gone deeper than it did. So let's zoom in a little bit on this formation here. You saw price head down, break the neckline, reject, head back down. However, we might see price dip down just a bit. It could dip down not much at all. It might dip down pretty far. I would take a look at this left shoulder as a possible possible area. We're also going to take a look at the liquidity over on the Kingfisher, and we're going to take a look at some Fibonacci levels as well. So the first thing we'll do is go to the Kingfisher. We'll grab a liquidity map for Bitcoin. Now, the Kingfisher.io is a great platform. It can be used for many things. I have just been using it for liquidity, which means I can actually get free credits on that. You can also pay for a subscription and use the link in the description for that. Okay, get yourself a discount. Okay, so most liquidity is pretty high up. There's a lot of people who've gone short with some extremely high liquidations. These are probably people just using low leverage, so not really a concern. Right now, it seems as if a move up is likely, according to this. Now, the charts do have to agree with that, but if there were a move up, it probably would go to 64.5 and then probably 66,000. So we'll mark those out on the chart. Okay, so there they are marked out on the chart. Let's take a look to the downside. Liquidity just above 60,000, and then there's some sitting at about 55,000, and then there's a smattering here anywhere from 56 to 58. Not very well defined, but I could look at this spike around 60,000 just as a next spot that price might go. And as price were to move down there, I would go ahead and take another look at liquidity and see if there were any changes, because liquidity changes quite often. So these are the levels price might go to. The algo is short-term bearish. However, what I can tell you about the algo right now is that it's short-term bearish, but it's high time frame bullish. So price may go down and sweep some lower numbers before it goes up. And one number that did not really show up on the liquidity charts is the left shoulder bottom, which is right at about 61,800. So this is an area price can go, right? And also, if we take a Fibonacci measurement of Bitcoin, go up to here, that 618 is very close to that 60,000 level that we talked about before, right? So if a move downward happened, I'd look at about 61,800 and 60,200. And if the head and shoulders were actually to form up and break out, I would look at targets of 66,800 maybe and 69,500. But at that time, I would go ahead and get out the liquidity charts and use that data as well. And I probably would take profits on a long at about 66,800 at that point, because Bitcoin does want to break up on the high time frame, but in the meantime, there is probably more for it to do a little bit on the downside. Let's move on to gold. Now, gold, according to this look, seems to be finding a little bit of support. So let's take a look at what's happened with gold over the past several weeks. There's a very long consolidation, a multi-year consolidation, and price broke out with a vengeance, and many think it was in part to the October 7th event over in Israel where the attacks happened, and that was right about there. You can see price really moved up from there, and that tends to happen when there is war. Metals do break out. Now, what we've seen here, these were targets I had mapped out for actually years, 23-ish thousand, 26,000. Those are all targets I looked at, and another target on there is about 28,000. It's not marked on here. Target is far enough away to where I'm not concerned about it. However, the real question is, has gold went ahead, broken out as far as it wanted to go, pulled back as far as it wanted to go, and now going to go up again? And there is a case to be made for that. Gold's incredibly bullish, especially given its history, its breakout, the events, all that stuff. So we have this move up here, pull back, move up, and now we have a pullback. And the question is it going to head back up? And if so, where is it going to start doing that? Well, I would take a look at this consolidation right here for some liquidity that might get grabbed. Now, it may not make it down there. Very often during bullish markets, price does not go back down to where people want it to go, right? Everybody wants to get a good deal on the way up, and those prices get front ran. There is a little bit of a peak right here. I'm going to zoom in so you can see it. You see where gold popped up and made that little peak. Technically, gold could go down and grab that, or it could just simply go up from here. I'm going to look at the algos to see if we can get any clues. For the moment, the high time frame is actually up against a resistance. So I think price may range a bit before it goes up, or even go down and grab that liquidity. It's going to be a little tough for price to break above 2,430. It could happen, especially if there were events in the world that pushed gold up. But for now, gold, if it does go up, it's probably going to happen more slowly in the short term. Now, in the long term, that can absolutely change. But I think gold could actually range in this sort of area for a moment. It could be between, say, 2280 and 2330. That is a reasonable area where price could develop a range. And for the moment, there is just a lack of volatility in gold, right? Because it's moved up so hard, it's retracing now, it's finding, basically it's in price discovery. You know, this is an all-time high for gold up here at 2430. So I'm going to have to keep an eye on gold before I really say a whole lot about what's going to happen happen, or at least what I think is going to happen with it, but there are some ideas that we've put forth on here. Let's go ahead and take a look at the SP500. We'll actually look at the ES1, the E-mini futures. Looks like I did look at this earlier today. So the idea is pretty clear right here what I think is going to happen. Of course, this is going to be very subject to what happens with interest rates if they decide to cut. Usually interest rate cuts, especially if there's more than one cut in a row, that tends to push the markets down. And as to why that is, I have my theories. I think it's because people don't want to borrow money to buy stocks until the rates are very low, and they understand there are going to be more cuts, so they're going to hold off, and also it's going to give them a chance to reposition to make some better profits. So there is always that chance. If there is, let's just say, fewer cuts or fewer cuts in a row, it might be the price actually doesn't go down or doesn't go down very fast. So a lot of this is going to be as the data comes in, which trading all really is. But this is what I think is going to happen for the moment. I think right now, based on the algos that I looked at this morning, price is probably going to range and then eventually start to pop up and touch that all-time high. We are in an election year. The people in charge are going to probably want the market not to fall, because that is going to make a difference as far as the election is concerned. The appearance of normal is important, and also, as we talk about in some of the videos, Expound the Profound talks about how they crush the VIX, and when the VIX gets crushed, that basically what they do is price wants to fall and they crush the VIX, which means that what they're doing is they're stopping the volatility, right? So the powerful move down, the power gets cut, price stops right where it is, and it kind of gives the market a chance to reset. Who knows how long they can do that for? It seems as if there are some pretty complex mechanisms that allow that to happen. All the same, this is what I see happening in the charts. I hope this is helpful. Please come over to algofactory.tech. We help people build trading algorithms, right? It's just a trading method. You don't have to know how to code. It doesn't have to be an automatic trader. You can simply use a trading method to manually trade. We just help you build a solid one. As a matter of fact, I have a testimonial that I'm going to throw up here right now. Have a listen at that. Here we go. Right. So this is a written testimonial from Diane, one of our clients, and she says, I've been following you around since 2017, 2018, Rogue Money, WT, Chart Snipers. I've been lurking in the background, but things are finally coming together for me these days. Putting the work in, back testing, the whole deal. This is a very direct, decisive course you put together here. It gives me a lot of confidence. All right, well, those are some very kind words. Thank you for saying that, Diane. All right, thanks for listening to that testimonial. Come on over to algofactory.tech, and don't forget, trade your job, upgrade your life. We'll see you on the next one.